Hey, welcome back to the channel, Fully Invested Fi. Today, I'll be going over portfolio updates from week 38 since I started investing my full paycheck at the end of May 2025 and fully living out of my Robinhood brokerage account. As usual, I'll go over this week's performance, dividends received, and some portfolio thoughts given the layoff that happened this week. As far as news affecting the portfolio and finance video of the week, given the layoff that happened this week, like I mentioned in yesterday's video, I've obviously and honestly been pretty distracted by it and haven't paid as close attention as normal to the overall financial news and goings on. So we'll be skipping those for this week. But yeah, hopefully maybe they'll be back next week or the week after. Yeah, hopefully that makes for a quicker video today though. So on the bright side. But yeah, that said, as always, like I share all of my numbers with radical transparency and you can kind of see my full portfolio and performance with no paywall. Everything is linked in the description below if you want to follow along, especially on the Snowball link, and poke at the numbers yourself. So before we get started, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. As far as the monthly flow that I was using before the layoff happened last week, you can kind of see it here. So that's a little refresher for anyone that's new to the channel. For now, obviously, this is like old and outdated given what happened. Yeah, this chart will change pretty drastically in the interim as I'm kind of job searching and just collecting unemployment and living off my dividends. Just for reference though, this is what I was doing before the layoff happened. I typically invest 100% of my income. So before that was at least 10.8K every month into growth and high yield ETFs. As I mentioned, I've stopped using a traditional bank account and live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And the goal is to ideally never sell share, forever compound both my growth and high yield assets and have my monthly dividends eventually exceed my monthly expenses. If you want an in-depth breakdown of this chart, check out this video at the top right. And yeah, let's just get started. So if we pop over to Robinhood, you can kind of see, don't actually have Friday's day's gains here, so just ignore that for now. But yeah, definitely another red week. Yeah, tech kind of continues its march down and sell off, right? So, and given the margin, I'm kind of getting like more amplified losses based on that, right? So yeah, margin cuts both ways, works to the upside and downside, and obviously right now it's on the downside given my heavy tech exposure. So down 6.9K or 4.44% on the week. On the month, yeah, down 13.7K or 8.42%. On the 3 months, down 5.5K or 3.61%. Yeah, definitely still recovering from the November downs, essentially. It's like kind of almost getting to flat from there. And year to date, started off the year good, was up, was beating the S&P for a while. But yeah, these drawdowns in tech the last couple of weeks have definitely been hurting, right? So down 7.5K or 4.8%. And if we go to the all view, just a little under even. So down 400 or 0.27%. So yeah, definitely away from the highs here all the way in October, right? It's just been kind of like a big downslope since then. Downslope and then chopping sideways and then down. So that's how it's looking. As far as the margin numbers, we won't quite look at that yet. We'll just look at that in the on my investment sheet here. But yeah, as you can kind of see, it's just my live portfolio, not hiding anything here. And then, so if we go to the sheet here, and if we go of just the top line numbers overall, kind of see that my gross portfolio value with like all my assets combined amounts to $305,805. And on margin used, I have $156,773, which gives me a net value of $149,032. So overall, as far as total profit, so I'll just be going over basically these numbers here, right? Just because like, yeah, just going over total profit. That includes the margin, realized gains, dividends. So yeah, with total return, I'm up $40,650 or 27.28% if we go off the net margin value. And yeah, realized gains obviously very red because of like specifically the high yield side here. That's down 9.44% if you take out like the dividends, right? So you can kind of see both realities there. For the most part, everything in growth, most of the things in growth is green except for yeah, Hood took a beating, Take Two took a beating the last couple of weeks. PMO has been a bit getting dragged down a bit too. So normally I would have bought these dips, but given the layoff, I'll be kind of changing things up. Obviously, I think I'll be prioritizing cash flow over the growth stuff for now until I get a new job. So yeah, that's how it's looking. And Yeah, as far as how everything's split right now on the growth side, there's $169,718 or 55.5%, and on the high yield income side of stuff, there's $136,086 or 44.5%. So, yeah, this is on the high yield side, all these guys, and then all this is on the growth side, right? So yeah, the idea is that the growth side stuff helps offset a lot of the NAV erosion that happens on this side of things, right? But also this year, like I mentioned to you, I've been kind of prioritizing investing in some of the more stable ones like XPay, TDAC, QQI, and yeah, leaving some of the higher yielders on the side for now, or just investing a lot less than what I was doing last year, just to build a more stable base. But yeah, if we check on the margin health here, so yeah, the gross portfolio value that I mentioned earlier, the margin used, so this gives me this net value. And then when you apply my blended margin maintenance on the gross value, you get this number here, right? So $77,725, that's basically the number that the portfolio would have to hit to trigger a margin call. So between that and the net margin value, that's like about a $71,307 buffer. So in Robinhood terms, which would they go off the net portfolio value, that's a 47.85% buffer. Personally, I like kind of going off of this instead, just because this makes you feel safer than it is because the number's bigger. But really, the number I like to pay attention to is this one, which is going off the gross value, because basically this number, if that goes down off this portfolio, right, that's the equivalent of 23.32%. So that's what I'm looking out for as far as like if the market corrects that much, right? So definitely something that could happen over like a month, over like several months. So definitely keeping an eye on it, and that's why I like have these in like highlighter green to always kind of keep in mind. And yeah, my equity right now is dipping under 50% at 48.73%, given all the dips that have happened. And I'll talk a little bit about this later in my portfolio thoughts, but obviously I'm gonna have to change this up a little bit as far as like how I handle it, because normally my full paycheck would have been kind of retopping this up above 50. But yeah, we'll talk through that later. But with all that, my buying power is sitting at $66,346, and my cash available for withdrawal is $33,173. So the buying power is basically just my margin total here minus with the margin used. That's the buying power, and then half of that is basically the cash available for withdrawal. So trying to keep this as healthy as possible, but yeah, now that I'll be kind of drawing down and like a lot less income coming in, like this will be important. That buffer is nice to have, so because this will be kind of be going down gradually, right? And then right now to my income is sitting at slightly above 4.6K at $4,616. If we go off just the value that's invested on high yield income assets, that's about a 40.71% distribution. Or if you go off the full taxable portfolio, that's actually 18.89%. So I just like calculating off the actual high yield assets too, just to get an idea of like, yeah, how much I'm getting when I'm investing in stuff, right? And yeah, so that's the overall numbers there, the top line numbers for the portfolio. So if we pop over to Snowball, I can kind of see here. So similar-ish numbers, like, yeah, I just have a lot more history in the investment sheet. So it's a little bit more up to date as far as total profit and stuff. This basically just goes back like pretty much to last year and then some of like the previous years, but there's missing some. But yeah, as far as how stuff is split up, you can kind of see how I split things up in the high yield space. So the ultra high yielders, that's the only one that's like really in the red in total returns, and that's like YMAX, WPay, Ulti. You can kind of see there given its high distributions, it does erode, right? But it is nice to kind of have the extra yield from these because they're still like over 30-40%, which is pretty high. And even with like how stuff has gone down, right? Because like originally say Ulti was, when I was investing in that last year, that was like 70%, but now it's more closer to like 40-50%. So still pretty high overall. I yield single stocks, like really just NVIDIA, Misty, GOW. This is my YouTube earnings. BTCI, which has got hit a lot. Crypto has just got hit a lot between Misty and BTCI. My anchors here, XPay, weak temporarily. This is going to be invested into one of these or maybe a new one next week. We'll see once my head is a little bit more clear from the layoff. So XPay doing amazing. Down in capital gains now for the first time in a bit, but a lot of dividends received. TDAC, yeah, just in the negative given the tech dips, and same for QQQI, but not by too much, so not too bad. And then my little gold hedge here, which is doing good since gold's still doing good despite its dip the other week. Growth and dividend anchors doing great here, apart from SPMO since it's fairly recent from December, but that will go up over time. And then my growth single stocks, so overall in the green here, really carried by Apple and Microsoft here, which have amazing gains, and Costco getting up there from the downs that I've had it since I kept investing in it through the downs last year. But yeah, Robinhood and Take-Two obviously got hit pretty hard over the last month, as I've mentioned before. Normally, I would have bought the dip on these like this week, for example, had I had I still had the job. But like, yeah, things change, and yeah, we're pivoting. So like I've said, the strategy also has never been set in stone. So it's always meant to be flexible and to react to things as they come, right? And yeah, so if we pop over to the growth side of things to kind of compare to the S&P 500, I'll just pull over here. So yeah, if we check on the week here, if I isolate it to just this week. Oh, all right, there you go. Yeah, so on this week, yeah, the S&P was down 1.25% or $1,930, and I was down 2.16% or $3,335. I think how Snowball calculates this basically is that they almost assume that like this, anytime you make a buy in your portfolio, you made a buy in the S&P, so it kind of gives like a kind of one-to-one comparison of how it would work out in that way. I wish I would add the other indexes too, which would be nice. Yeah, so definitely, yeah, trailing the S&P this week as far as 7 days, trailing it here on the month, as I mentioned, kind of trailing it as well on the 3 months. Yeah, trailing it. Yeah, so the downturn has just kind of like hit quite hard, right? So definitely the dangers of margin that you have to kind of keep in mind. So you can kind of see here how I was beating it out for a good chunk of January, and then these dips. So you can kind of really see it's like I'm following those dips, and it's like amplified on both sides. But yeah, those dips kind of hit hard. Like a lot of the crypto stuff that I had here definitely hit. But that's why I give those disclaimers about the margin, right? You got this a lot more volatile. So it's not something I'd recommend for most people, right? And yeah, and then my favorite little part here, the new heat map. So if we isolate this to last week, you can kind of really see the sea of red, right? D holding strong last week. This has been like a great holding in going into this tech downturn beginning of the year. Costco holding strong, Misty surprisingly holding strong with its dividend, and gold holding strong as well. But everything else just in the red. XPay in the red, VU. XPay has been matching VU very nicely and very closely too, which has been nice between its dividend and its price movement. QM for tech down, SPMO down, and Nvidia down, and YMAX down pretty similarly. They've been kind of following each other pretty well. I am curious about BPay's strategy change. Definitely check out Eugene's video that I'll link at the top right here. They're changing it to basically top W. So they're going to use an index to basically do like the top 25 stocks essentially of their weekly holdings. So I think that should like factor out a lot of the kind of like high flyers and ones that have been kind of dragging the portfolio down as far as like Coinbase, Palantir potentially. So it should, I'll be curious to see what happens when the strategy changes in March. That should help stabilize WPay a little bit more, because right now everything's just equal weighted. So like MST, Coinbase and all that stuff really drags stuff down. So yeah, I'm very curious to see how that will affect it. And then yeah, Alti down this week, BTCI down this week more. Yeah, so rough week overall. Robinhood down a lot. Yeah, normally again I would have bought this dip, but it is what it is. And then if we check year to date, you can kind of see. So yeah, SEHD, as I mentioned, 15%. For people that were hating on SEHD on the comment, look at this pretty much. Like all tech is in red here, and SEHD is up 15%, while tech is down 2% here. So yeah, and again, this is like precisely why I hold SEHD. It's for exactly these tech downturn years. I am heavily exposed into tech, probably still too exposed, honestly. So it is nice to have a good chunk of my money here in SEHD to kind of help reduce the losses a little bit during these tech downturn years. I don't hold it for when there's a crazy bull market in tech, right? So yeah, all part of kind of balancing my portfolio out. So if we look year to date here, HD holding strong, up 15%, Costco up 18%, doing amazing as well. Costco's another one that I hold for kind of precisely these tech downturn years. Gold holding strong at 7.5%. Alti still kind of netting positive. So again, I know Alti has gotten a lot of hate over a little while, but its strategy change has kind of been kind of holding strong so far, despite the big down pressure from the tech sell-off. But yeah, XPay is down with VU, SPMO down, QQM down, Apple down, YMAX and WPay down altogether. It's like practically the same. Nvidia down, Coin down a lot, Hood down a lot, 26%. Same for Take-Two, 20%. Yeah, Misty just taking a hit along with the rest of crypto. But yeah, you can kind of see that there. So yeah, love this little heat map feature. Definitely encourage people to look at it for your portfolio. It's always nice to kind of just see how everything stacks up together and see everything at a glance. But yeah, that was the week. As far as dividends received, we can kind of check here. So yeah, got dividends from GOW, so $19 at 24.68%. WPay $121 at 37.48%. A little quarterly Apple dividend, $13.27 at 0.41%. Ulti, a $200 dividend at 68%. XPay, great stable dividend at $667 at 21.74%. IMAX, $115 at 45.67%. Quarterly Costco dividend at $10 at 0.5%, Misty $41 at 64.78%, and Nvidia at $174 and 40%. So yeah, a good week overall. Pretty much 1,300 this week, which was a nice week. Right now we're projecting to get $3,800 this month. And yeah, this is how it's looking for forward looking for the next few months, based on, they basically take the last payout in Snowball and then project that out, right? So this will kind of fluctuate every week pretty much. Yeah, gives a rough idea of how stuff will be looking. And yeah, that's the stuff looking forward to next week. If we pop over to dividends here to kind of see yield on cost on stuff. So really Alti's dividend was 68% this week, but really for my yield on cost, I was actually closer to 45%. Misty, yeah, 12% instead of the 64%, given how high my average cost is. YMAX, yeah, the 45% dividend was actually more like 29.16%. Nvidia 40%, but actually 25.82. WPay 37, but actually 25.77. BTCI, yeah, 36%, but actually closer to 22.56%. GOW, that one 24.68, but actually 23.64, so pretty close. And XPay holding steady here at 21%. TDAC holding steady, just slightly lower. QI slightly lower, but holding strong there at, yeah, between 17 and 14%. And gold, yeah, gold's just been ripping up, so it's been doing good. And yeah, that's how it's looking for the high yield stuff. And yeah, as far as portfolio thoughts, like I mentioned, the equity is below 50%. So yeah, likely this will get worse as I draw down from the portfolio, since I'm not going to be having the same income coming in. So I'll just have like the 4K from unemployment and then also the dividends. So yeah, about like 8.5, 8.6K coming in every month instead of the 10.8K. So yeah, the more I think about it though, and I won't sell any of my growth single stocks or ETFs quite yet. I'm thinking though that I will definitely pull the contributions from my Roth IRA. So I'm going to leave the gains just so I don't trigger any taxes or penalties. So you can always pull out your contributions tax-free if you didn't know, for your Roth IRA. And then I'd bring that to the taxable brokerage. So I'll likely just invest that into more stable high yield ETFs, something like TDAC, QQI potentially, and maybe even look at like Tap Alpha's new leverage ones, TDAX for example, or T6. So yeah, I'll have to think about all that, but yeah, that should help bring the equity up and then also kind of increase the monthly income as well too. But yeah, beyond that, as I mentioned in the last video too, in a pinch I can always bring in money from the HELOC too potentially. But yeah, at this point, if I dip into the growth side of things, I'll probably only do that if like I come up to the end of the unemployment payments in 6 months and I haven't found a job yet. And then potentially I'd start bringing in things gradually, right? So first I'd probably go through the single stocks to kind of just de-risk that, then potentially put that into some more stable ones like TDAC, QQI. But then in a crazy emergency, then potentially dip into the growth ETFs. So yeah, I don't want to do everything all at once. It would be kind of gradual if that happens. But yeah, again, like I mentioned, once I'm clear, kind of finishing updating my resume and portfolio, I can think about all this a little bit more clear-headed. Like it's definitely a bit of a rush to kind of get through all that stuff right now before we get cut off from our work PCs. So once that's clear, I'll do proper projections and everything. But yeah, these are my thoughts right now, just in between as I've been thinking about stuff between portfolio cram sessions. So yeah, that's pretty much the video. Went a little bit longer than I thought, but that's okay. But as usual, if you want to follow me off YouTube, a bunch of different ways you can do that. You can do it on Blossom Social here. You can see all my trades, all my posts here. As I mentioned, you can kind of follow me on Snowball. You have all my numbers here. Nothing's hidden really. And you see all my numbers, what's in the green, what's in the red. You can poke around and see pretty much all the same stuff that I show on screen really. And then Patreon too, I upload all my videos, all my backlogs here. This is just kind of really like a just in case there's more YouTube shenanigans. So good way to support there. And yeah, that's totally free, same as in YouTube, but there's also a little membership option just to support the channel really. It's nothing too crazy as far as perks. Just think of it as like a monthly tip jar if anything. And then, as usual, there's also the Discord, where I'm chatting constantly with people in between videos. There was a lot of activity this weekend with people kind of going over stuff. But it's a great little community that we're building. We're nearing 300 members, so very, very thankful for the community. And yeah, how there's like tons of different like ways people are doing stuff, and people can get a lot of exposure to just different ways you can kind of slice this financial pie to kind of get to financial independence, right? So yeah, I highly encourage people to just be exposed to different ways, not just mine, right? I don't think there's one end all be all way to kind of reach financial independence. So hope to see you there. And if you like this video, please like and subscribe. The bell notification if you want to be notified about next ones. I'll definitely be a lot more active on YouTube now that I'll have a lot more free time. So look forward to more videos. I won't necessarily have a set schedule or anything like that, but yeah, I'll catch you in the next one. Peace.